Welcome to a new Market Cap episode. Market Cap is where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. The content presented on Market Cap is intended solely for informational purposes. The views expressed by hosts and guests are their own and do not necessarily represent those of Aliyah Research, its affiliates, or any organizations with which participants are associated. Nothing discussed should be construed as financial, legal, or investment advice. Viewers are encouraged to conduct their own analysis and consult professional advisors before making investment decisions. I'm your host, Stefano, Director Institutional Services at Alea Research, and with me I have David Gan, General Partner at Inception Capital. David, welcome on the show.
Thanks for having me.
Yeah, for sure, man. Just back from a hectic 2 weeks in Korea and Singapore, I imagine.
Yeah, still in Singapore, recovering from all the conference.
Yeah, that's smart. Instead of hopping straight on a plane, maybe decompress a little bit first. Um, that's smart. We'll talk a little bit more about Korea Blockchain Week and Singapore Token later on in the show, but I like to I like to do the shows in a way that first we provide a little bit of historical context, how we got here. If I'm not mistaken, you ran investments at Huobi, now HTX. That's where you developed the ideas and the thesis for Inception Capital. Maybe let's start off there. Like globally, what was your experience like at such a large exchange and running investments there?
Yeah, definitely. It's a very big change running my own fund versus back in the days where I had a myriad of support across multiple departments. I think at the peak when I left Huobi to start the fund, we were at nearly 6,000 people, right? I mean, over 50 different departments internally. I obviously ran the investment division, but also I subsequently ran other divisions as well, like global strategy and Huobi Labs, which is the incubation acceleration arm of Huobi, and helping a lot of sort of these portfolios globally come to the Asia Pac market and ultimately, getting market share there. So I think for us as a firm, it's not just about investing, when it comes time at Huobi, but more so like being able to work with other departments to find synergies for some of those investments and making sure that there's a lot of cross-departmental collaboration and also spreading not only the awareness of Huobi as a global exchange, but also working with portfolios so that they can get day one liquidity on Huobi so that we can put the tokens in the hands of as many people as possible. So, and that was one of the visions of Huobi, is being able to give everyone in the world access to crypto. We serve over 170 countries across a 20 million user base. And I guess for the Inception is really reiterating a lot of that concept and being able to translate at a global scale.
Yeah, that must be quite a challenge. I mean, it's such a mega company, and now with Inception, your scope must be much more focused, and obviously, it's a great ambition to get on the same scale. But I can also imagine that starting out, it's more focused. But I can already see you're expanding a little bit. You got a head of secondaries, which we'll talk about a little bit later as well. Um, Before we get to that, what was your main learning, would you say, from your chapter at Huobi?
Yeah, I mean, the space can obviously fluctuate very fast. I think for us, during my time at Huobi, even though the market fluctuated a lot, like I guess my position is fairly stable, right? I was a major executive at a major exchange. It's really regarding whether we make a lot of money or not, as still a lot of money, but maybe not as much as the extent of the bull market. So like, I think a lot of people during the bear market, they were, they ran out of their business, right? Or like they didn't have much to do within sort of bear market, especially for some of the investment firms or some of the marketing agencies, or a lot of our partners actually across the crypto space actually took a step back. But Huobi, there's always so much to do, right? So regardless of bull market or bear market, whether I'm doing investing or I'm incubating projects or I'm helping sort of expand the exchange business, for Huobi, it's always consistent that like there's always way too much work to be done for sort of the amount of capacity that I have. So I definitely within the almost 4 years there, I feel like I've gained over 10 years of experience just operating at different roles. It's kind of like the investment banking mentality, right? I started off at Morgan Stanley. Everyone says within banking, it's like the 2 years of experience you have in banking. It's like 5 years of actual work in real life, right? So I think just being at Huobi just allowed me to almost has a God's eye view on what's happening in the space, right? Because at the end of the day, right, at that moment of time, right, exchange was by far the most powerful sort of player in the space, in encapsulating pretty much every single angle of the crypto industry, right? From early stage projects to ultimately investing to, getting global share for the project via the exchange listings, working with the different wallets, working with sort of a lot of the different ecosystems. There's like so much that the Huobi has sort of participated in the space that I was able to get a good understanding of pretty much everything that's happening. And it's very, very fulfilling and a holistic experience. So like within 4 years, I feel like I pretty much learned everything that I could. And I think it's finally time to move on and start my own firm. I think that's sort of the ethos of crypto and Web3 as a whole, right? Like if you really want to sort of make a meaningful difference and make sort of your impact in the space, you have to kind of go out on your own to start something that you have a lot of autonomy with, which what you want to sort of push for. And I think with my own firm, I'm able to actually just really be laser focused on the investment side of things rather than Huobi. I think I was also always juggling between multiple hats and,
Yeah.
um, working with multiple departments.
It makes sense. It resonates a lot what you said with my personal experience as well. Really shortly, I was doing partnerships at Hype, which is a marketing agency. And because you're servicing so many different clients, you also get samples of different parts of the industry, different sectors, different narratives, and it really speed runs your development. So I can definitely relate to that. And I can also relate to what you say that after a long stretch of that, you feel a certain longing to focus down on what you found out you are maybe most passionate about or most competent at, right? For you, I believe that means honing in on this inception this mission at inception, which what stands out to me is, well, before we get to that, maybe you should tell us what you think is the differentiating factor about Inception, and specifically how the experiences at Huobi led to you seeing that gap, I suppose.
Yeah, definitely. So, actually, this was during COVID. I'm actually surprisingly, I'm from Wuhan, where I guess where COVID happened, and so I was the only American citizen or executive with a U.S. passport from the Huobi executive team. So they actually had sent me to the U.S. to lead global strategy and also to help attract some of the investments from the U.S. capital markets. We're raising for a bunch of entities at a time, and also we're deploying our own internal capital to some of the U.S. projects. And during my time in the U.S., during the peak times of COVID, actually all of the people from China or from also Asia went back to Asia where it was actually very safe. Actually, there was not much COVID happening within sort of Asia because they were very, very well protected. People were quarantined if they had any sort of entry to the respective countries, whether it's China, Taiwan, or Korea. They had a very good COVID policy. And I realized during my time there was a void in the U.S. markets. Is that like no one domestically located in the U.S. Markets had really good understanding of what's happening in Asia, right? And during my time at Huobi, everyone will come to me not only for investments but helping with exchange listings, helping with sort of APAC go to market. So being able to sort of sit in the continental US, but also bring all of our resources to all of these Western founders that need a lot of the access to be able to really gain traction in the Asia markets was sort of void that I'm looking to fill. And ultimately, I'm still um, sort of powering sort of that movement from the East to the West and being that bridge, connecting the Western founders with all the resources that I was able to accumulate during my 4 years at Huobi and even during my previous 10 years at investment banking. I also ran my own startup for a couple of years and worked at a fairly large venture firm called Qiming Venture Partners, which runs about $12 billion US today, focused on consumer investing. So taking all of those sort of resources along with me to the US and applying it to all the different portfolios that we've invested over time and serving as that bridge to the East so they can have not only the global liquidity from the exchanges, but also some of the earliest seed users were Asia is by far the biggest addressable market for retail.
Yeah, yeah, for sure. We definitely see that in Korea as well. That was a main takeaway from the conferences, I think. All right, so it's accessing the Asian consumer markets and connecting them with the capital in the U.S., but also vice versa. If I'm understanding correctly, especially at Hobie, you were making investments into U.S. based projects, correct?
Yeah. So the goal is like the exact void I'm filling is in US, there is not that many, I guess, fund managers or GP. I'm probably one of very, very few, especially during that time in 2020, that really had a very deep, deep understanding of what's happened in Asia, not only with the exchanges, but how to really get market presence there, how to sort of build out your go to market, all of that. As soon as we invest in a project based in the US, we bring all of those resources with us and give them the playbook, but also connect them with all the right partners in Asia. But actually, conversely, for a lot of the APAC founders, right, when they're looking to get US institutional capital or looking to get partnerships, the converse of that is like, well, any APAC founder that we invest will help them bring to the US and really attract some of the institutional capital and help them really make a presence on the legal, regulatory, and compliance aspect of things, because a lot of them, have a very different regulatory regime, and really being able to get a U.S. presence is like the other side of the table value add that we bring for APAC founders. So hence why we kind of call ourselves the East-West Bridge, and being able to really not only bridge the cultures, but really bridging a lot of the resources that we're able to cover on both ends.
That makes sense. So it's going both ways. I have a more personal, maybe anthropological question as well. In this industry that's so global and so multicultural, and you yourself have feet in both cultures, right? Um, on the business end, like the way business is conducted, I always find this so fascinating. How do you bridge the gap there? Like I mean, like the difference in communication with maybe US based people versus Chinese based people or China based people. But also within the East, there's a large spectrum of how people conduct business, right? It's not the same in Japan as it is in China versus a place like Vietnam or Thailand. Can you shine a light on that?
Yeah. So I think for US and Chinese founders specifically, I think really just being able to speak their native tongue, right? Like with the US founders, I'm a big advocate of like the different sports that I pay very regular attention to. So whether it's watching football together or going to a baseball game or sitting courtside at an NBA game, right? It's really sharing sort of that bond for just sports in general, and being able to have sort of a mutual appreciation for the athletes out there, right? I think that's something that we've come to bond around. I actually started. I also always joke to people it's the most functional DAO that the space has. It's a basketball related DAO. It's called Hoops DAO, and we play every Saturday, Greenwich Village, and people pay, people come on time, and never any issues. And I've been running that for 5 years and really built a pretty good crypto basketball community, especially in New York. So really just being able to bond with people at a more personal level and being able to understand sort of the culture that comes with it. and just frankly being in the U.S. So I think the locational proximity to
Yeah.
people in New York is extremely important, right? I think you want to be close to investors. We changed the name to Inception to really signify that we're the first check-in. We are sort of where dreams are made. Our slogan is really we're seeding dreams. Like when you have the dream, we want to help to sort of make that fruition and being able to sort of help you execute on your vision. And for Chinese founders, it's like where you're from, right? I'm obviously from Wuhan myself. Um, I don't think people need to ask where that is nowadays, but it's really speaking native tongue. I'm fluent in Chinese. I did my own startup in China. I worked in banking. I did venture capital in China. I worked at one of the biggest exchanges. So I think there's a lot of commonalities with a lot of people's upbringing and sort of the experiences they've had, especially within sort of the Chinese capital markets. And being able to share those experiences, being able to like go to hot pot together, being able to really be sort of in home with sort of the Chinese culture at heart. I think that's very important. And with regards to like Japan or Korea or Singapore, a lot of the Southeast Asia countries, during my time at Huobi running global strategy, like I help to work with a lot of the local CEOs, right? So with either it's working with our Huobi Korea CEO to help push the Korea market and really get market share there, or we acquired Exchange back in early days 2018 in Japan to give us sort of the license to operate and run the exchange out of there. Very close with sort of our Huobi CEO there, who came out of Baidu, which is a major Chinese internet company for the Google of China. And for Southeast Asia, it's really working with local affiliates and franchises for Huobi Cloud with Huobi Indonesia, Huobi Thailand. We hosted one of the biggest conferences in all of those sort of separate Southeast Asia jurisdictions. So yeah, I go and speak myself. I work with the local partners. I'm heavily invested in a lot of these ecosystems. So even though I'm not from that particular culture myself, I think um, it's important, right, that you have one singular source that's able to tell you high level of how everything works, rather than have to speak to 9 different people for all the different jurisdictions within China. I think like for all of these major sort of jurisdictions within Asia, it's important to have like one point of contact where I'm able to share with sort of Western founders that I'm working with um, exactly what the background and what sort of they look for in these jurisdictions, and I singularly can connect them to all the best partners within those jurisdictions for them to work with, so that it's a one-stop shop that they don't have to go out and trying to find people, especially within countries and know-how where they're not as familiar with.
Agreed. You need a trusted partner for this region, um, and you touch on a lot of aspects why you fit that bill. I think you have initiatives going on in all of these different jurisdictions and countries. You obviously understand the language and the culture because you're from there, and you're really you have the proximity in the U.S., but also are sharing in their culture of appreciation for performance, right, and sports, which Americans are very famous for their adoration of sports stars and athletes. Um, I used to play a little bit of basketball back in the day as well. So if we're ever in the same, if I'm ever in New York, I'll hit you up about that.
Yeah, join Hoopsa. Happy to.
Let's do it. Um, all right. Hey, so on this east and west topic, what I noticed, the like geopolitically, I think like there's been a pendulum shift back the last few decades from west to east. Um, things are getting a lot more uh, neck and neck, let's say, a lot more equal footing. What do you what is your outlook? Like, where do you see things going in this regard? Both like geopolitically and let's say like how things are managed in the world at large, right? But also within digital assets specifically.
Yeah, I think ultimately the world is getting smaller, right? I think whether you're based in Asia, whether you're based in the US. Um, the amount of, the commute time, unfortunately, has not shrunk, but I think the way that people are able to connect at a global scale has definitely changed. There's obviously a lot of geopolitical tension on the more sensitive areas of developments on the AI side. But I think with crypto, it's actually very all encompassing, right? I think a lot of the best projects that do really well in the space have a good mix of understanding on both sides, right? A lot of times it's actually an Asian founder paired with a Western founder. So in tandem, they're able to actually do a lot of good things. But I think ultimately, both sides cannot be ignored, right? You can't really just only uh, participate in sort of the U.S. institutional market without adhering to anything that's going on in Asia. And I think one of the biggest takeaways for KBW and Token is that like all the big U.S. institutions, from Fidelity to BlackRock to Van Eck, or all of the big exchanges and market makers, and all of those sort of major ecosystems, Solana, Sui, or even Ethereum, right? Like everyone is paying much more closer attention to Asia, right? That's where the real big mass adoption is coming from, where a lot of the biggest retail consumer following is from. And by far, KBW and Token 2449 are the biggest conferences for the entire sort of calendar of crypto conferences. And they've actually increased significantly in volume from the previous year. So yeah, I think this is where something that everyone globally kind of comes across. And uh, no, I think Asia cannot be left ignored, right? So now that a lot of the institutions are coming in, people need to figure out a way to blend the two markets and be able to have more or less equal footing on two, right? And really taking priorities in APAC a lot more than previously before.
I fully agree. I myself split my time between the EU, where I'm from, and APAC, just because it's obvious where things are going. Like you said, the biggest consumer markets are here, and yeah, we're seeing a shift, and it's exciting, I think. Let's talk a little bit more about Inception again, the way the fund is set up and the workings of it. So what I've seen is that VCs are really evolving in the scope of their activities and therefore their setup, right? Um, I see that beyond early stage venture capital funding, which is what Inception does, you also manage a fund of funds. So I was curious, what's the reason for this? And does it also provide specific or additional benefits, but also challenges, I might imagine?
Yeah, definitely. So, I guess first of all, starting from my background at Huobi, so obviously we deployed out of balance sheet. We didn't have any outside investors, but I, during my time there, I not only managed direct investing for everything on balance sheet to early stage projects, but also I managed to be the first institutional check in the likes of Multicoin, Dragonfly, OneKeyX, all of the emerging managers back in 2017, 2018, and help to start, help these funds with some of their early LP checks so that they can ultimately, make their sort of name in the space, but also they grew significantly since when I invested. I think all of them, no one had more than 20 million AUM at the time when I invested. I think 1KX probably only had like 5 million AUM, right? So uh, we can all see how big some of these funds are now, to anywhere from like $2 to $5 billion is sort of the range of their AUM today. So definitely there's a lot of asymmetrical upside, not only investing in projects, but investing in funds very, very early. We made a mistake of not having invested in their GP stakes, which is actually very similar to early stage investing directly into venture. Is that you actually capture a lot of the upside of the firm as they grow. Because at the end of the day, they're a startup too. They are a business as well. So not only is it complementary from a deal flow perspective, but we're we're investing in really good GPs who are founders of really good venture businesses, right? So I think the fund of fund that we were able to spin up about 2 years ago, we actively invest in the holding entity, which is the GP stake of the firm. We're kind of like the co-owners of a lot of these funds, that we help to not only just be a passive LP check, but also help them sort of build out the business. We help them with sort of the early fund setup, help them with some of the capital raises, and really try to have them spend as much time on the actual investing part of it rather than spending a lot of their time on the operations and fundraising aspects. So that's something that, because we've been doing venture investing for the past 4 years, like we kind of really understand, the all the sort of steps you need to take to build out a venture business, and we're able to share a lot of our know-hows, right? It's just kind of like doing venture today, investing in the next generation of founders. You're just passing on all the knowledge that you had when I was a founder before, even though it wasn't in the Web3 space. But at the end of the day, you're building a company, you're building a product that people want, and you want to get traction and market share within whichever jurisdiction you're aiming to do, right? So at the end of the day, it's if you have the skill set, and investing is the best way to pass down the skill set, because at the end of the day, you are a equity owner along with uh, you own what the founders own, right? So you
Exactly.
want to be aligned with them, and you want to be able to help them not only from your resources, but also from like the experiences that you've done. So been doing fund investing for 8 years now, dating back my time at Huobi. So it's really just continue to try and replicating some of the success that I already know how to do, and hopefully, sort of this next iteration of GPs were able to sort of do, and mirror some of the success of the early vintages of venture funds at back 8 years ago.
Yeah, that's fascinating. I never thought of it that way, but the way you explain it makes a lot of sense. There are startups as well in
Yeah.
in actual fact. So yeah, why not have some skin in the game and align basically your incentives, right? And that way help them out while you're also providing funding for them. I'm gonna guess then that that works like two ways, right? It works the other way around as well. What I'm getting at is like you have backing LPs that include Animoca,
Yeah.
Mirana, Digital Currency Group. Does that mean they kind of do for you what you do for the funds in your fund of funds?
Yeah, I mean a little bit. I mean, I think a lot of these, they're major listed companies or major conglomerates within the space. I think the LPs in my fund, they don't take an ownership stake in the fund itself. So I guess our fund is like we buy a piece of the holding company, so that we're effectively uh, a part owner in the management company where we share some of the management fees and carry.
Yeah.
For a lot of these institutions, I don't think they want to be that hands on. They have obviously a lot going on. I think it's more of an ecosystem bet. They enjoy obviously all the deal flow that I'm sending to them, and they don't want to help to operate the business. I think a lot of times for these big institutions, it's just kind of like where I'm coming from at Huobi, right? Like, we're investors and LPs, and we enjoy more so for the asymmetrical upside for the fund doing well, right? And we're able to help them and be one of the buckets that they diversify their internal holdings and balance sheet to, so that they're not so concentrated on their main business, but they want to sort of better manage their treasuries.
Okay, that makes sense. So it is actually a little bit different.
Yeah,
Just
we're very just like some VCs, they also are just pure capital allocators, right? I mean, I think a lot of VCs, they just invest, and there's they don't do as much, right? I think for us, like we take a very hands-on approach, not only from a VC perspective, but also from an LP fund investing perspective, right? I think typically LPs just write a check, and they don't really are not expected to do much after that, because like even writing a check is actually a big value add for any funds that's looking to raise funding. But I think we just take a step further, right? We help with continued fundraising. We help with the fund setup. We help with a lot of things that are much more proactive than the typical LP check writer.
That makes sense. Yeah. I mean, given your long track record, you have not just capital to share, but also a lot of knowledge to share, a lot of experience, insights, best practices.
Yeah.
So I think that makes a lot of sense. Um, all right. As far as Inception is concerned, you do venture capital, you have the fund of funds. You also have on the team, I saw a head of secondaries.
Yep.
Um, and I assume that means you now also manage a liquid funds, which is like a pretty natural evolution, I think, for VC. Um, but maybe you can tell us a bit more about the objectives and activities of the person in this role, beyond just managing the unlocks that you get from your investments.
Yeah. So I mean, there's a couple different folds, right? Like for background, Felix, he was one of the top traders at OKX. So Huobi, early days, 2016 until now. I think definitely a majority part of it is like, I think for our venture book in particular, we're a lot more liquid than other venture funds. Just because of my relationship with the big exchanges, we have almost 20 projects listed on the major exchanges. Binance, Upbit, Bitsum, OKX, Bybit, etc. And it's actually a pretty sizable liquid portfolio that we need to manage, right? And that's why we recently brought on this role to be able to manage all the different liquid positions that we have within the fund, but also proactively look for discounted OTC deals and exposure to get further liquid market exposure with this role, right? So obviously, we want to be actively investing in the market, and if we think there's a good opportunity to participate, we definitely have that within our mandate. But I think much more of the responsibility is managing our existing portfolios and making sure that they're well capitalized and there's and treasury management as part of portfolio support as well is like a lot of builders are great founders, but they don't really know how to manage their treasury. Once the token gets listed, I think that's a very important aspect of maintaining good health for your company and making sure that you have enough runway, and also at the same time managing the token price and being able to stay attuned to the market.
Got it. Okay, so it's not only about managing your own portfolio, but also proactively helping out your founders within your portfolio companies to help manage their treasury. Because you're
Yeah.
right, that often goes wrong because they don't really have the know-how or experience.
That's right. That's right. But also looking at like secondary opportunities as well. So I think there's a many, I think with a startup venture firm like ours, like everyone wears multiple hats, right? And we try to just um, be as all encompassing as possible with regards to all the different value that we're able to provide. At the end of the day, right? Like the more value we provide to the founders, the better the projects are gonna do, and in turn, we're able to um, be able to have the best sort of upside and reward for the investments that we do.
Yeah, I think it also alludes to what you were saying earlier about at at Hobie, you had a very wide scope of things that you were working on. And with Inception, you wanted to do the same. Obviously, you're a startup starting out, you focus on one thing. But it's
Yeah,
obvious from our conversation that you're already expanding
yeah,
into a lot of different fields where you can provide additional value, right?
yeah, yeah. I think it's just like you start to figure out different pockets where you're able to add value, and that's how businesses are created, right? Like I didn't start a venture fund just because I felt like it's time to start a venture fund. There was like people coming to me left and right within the US. It's like who can best help me figure out, or who can best help them figure out what's happening in Asia, right? Or how to sort of work with the exchanges. And and I had so much work at Huobi, and it's like I'm unable to address a lot of these requests and needs, right? So it's only
Yeah.
natural that I start a venture fund that specifically focus on investing in the U.S. As a great part of the mandate and helping these founders go to market and figure out Asia and helping with the exchange listing aspect of things. And people are realizing that's more and more important by the day, especially where that's where most of the global liquidity comes from. And now that we're more or less kind of back to a bull market upswing, it's time to really tap into that liquidity and make sure that people have your token, right? It's less so about like what the token price of a particular project is. It's like it's being able to get your token in the hands of as many people as possible, right? Like, across Binance and top exchanges, there's like 100 million users, right? And like have a day one listing on the spot exchange of that volume, you're able to have 100 million people see your token at the same time. And obviously, if they're buyers of it, then you've not only added a user, but you've added an investor and a potential future advocate for the token at hand, right? So I think there's a lot of really good incremental value in working with the exchanges and being able to sort of have sort of the top spotlight for some of the tier one exchange listings.
Yeah, absolutely. Like you're touching on a very important point, right? Where these exchanges have become such a strategic point of the whole roadmap for these projects. I think that also touches on your investment thesis, um, which we could talk about next. So yeah, you're already alluding to this fact, right? That we see a new landscape emerging with these exchanges gaining a lot of influences. DATs also getting a lot of institutional traction. So what do you think that means for funds like you, but early venture capital in general and its payoff? And do you still think it's the most asymmetric bet, and why so?
Yeah, I mean, I think anytime you're able to invest in a company as early as possible, that is where the best asymmetrical upside comes from, right? And I think for particularly in venture, that's where you're able to get involved in some of the game changing companies of the future, right? Like, for example, during my time at Huobi, we were early investors at Circle before they launched a USDC product, right? I think they were just in the planning phase of that. And, 8 years later, USDC is obviously now a top 10 market cap token and it has the second largest market share among stable coins in the world. So a lot of that, if you're not an early investor, it's very hard for you to get meaningful ownership as well as good relationship with the founders at a very very early inning, right? I was also during my time at Huobi early investor in Ondo, right? All of this, they were able to obviously get a lot of traction as well over the past 5 years. So I do think venture is a very long game. It might take quite a long time for these projects to pan out and be able to really be a vertical leader within their respective fields, and definitely a lot of hardships along the way. Just 2 years ago, USDC depegged to 85 cents, right?
I
Like,
remember.
I mean, you can think like just within 2 years from almost the company just going under and entirely the stablecoin space collapsing on its head to being one of the most successful US IPOs in the history of IPOs, right? So definitely a lot can change within 2 years, but I think at the same time, you have to think about venture and in the long game, right? And similar with Ondo, right? Like we invested before RWA was the RWA, the word even existed, right? And I think obviously they're able to capture momentum with sort of their US Treasury product, but this was also started before we really could have thought like any of this was able to really take much traction within sort of the Biden administration. And I stay true to all the investments that we've done for the past 3.5 years. Obviously a lot of these things look still very early, but they have massive upside potential. We're the earliest investor in Mega ETH, right? Like no one wanted to invest in like another layer one protocol or a high throughput performance blockchain But now, it's probably one of the most anticipated upcoming launches of the cycle, right? So obviously we're very excited for that, and been doing a lot on their ecosystem. So um, yeah, that's just some of like the sharings I can have for some of the things that we got. I guess myself individually got involved in over the years.
Yeah. Okay. Okay. That makes sense. You can get in very early. Projects like Mega ETH, Ondo, Circle. We did a lot of coverage on Mega ETH as well. It uh it is very interesting what's happening there. I agree, it's definitely highly anticipated. So you're not pivoting to launching a new exchange or DAT anytime soon. Then.
Yeah, I mean, like I think we want to actually invest. You can see about our investment thesis is like we want to invest in very under the radar, like new primitives that I guess like you can see all of our portfolios. None of it is like a really hot name or a hot round that people have done. It's all kind of like these under the radar thing, and maybe 3-5 years later, they become hot, right? So I think for us, it's really about identifying uh, really good talent, obviously from the founder base that we have built over time, and really sort of the close circle of friends and founders that they respect, right? Coming from that pool of really high quality referrals, but also just like um, different primitives and innovation that we think is going to pan out from a 3 to 5 year um, stance later, right? Like our venture fund, I think it's probably one of the longest venture funds in terms of fund life by any crypto fund in their fund one. So we have a 12-year fund one, right? So we can be very, very long term, right? It's okay if we invest in something that doesn't ultimately um, it, it doesn't ultimately take traction until 5 or even 8 years later, right? Like for example, for Circle, right? Like we're okay to be very, very long term, but we obviously want to find something that has massive upside potential, but also is something that other people haven't really worked on yet, right? That is very forward thinking. So we're also investors in like opacity, right? Like ZKTLS wasn't popular like 3 years ago. People still probably don't really know what it is, or like FHE, right? Or like all of these sort of incumbent new technologies that they're battling to sort of replace sort of incumbent technologies that we see today. And I think technology always evolves, and we want to be at the forefront of that.
Absolutely. You quickly touched on something that I have a question um, about early stage VC, right? Um, because the project is in such an early stage, there can be a lot of traction. There can be a lot of data. You said you talk a lot with founders and get referrals through them. Is that the way the early venture capital game is played? Like really making bets on individuals?
Yeah, I mean that's the way we like to do it, but I don't think it's for everyone. Like I think you have to have a certain mindset of having been a founder before, right? That you can.
Mm.
It's hard for you to see if a founder is any good if you haven't been a founder, if you haven't really been sort of in those shoes before. So definitely not. I don't recommend this to everyone, but I think that's the way that we like to get involved. It's from just day one. And I think that's when the valuation are the lowest. And that's when we can actually almost be the extension of the team and really work with them to help shape whatever idea they have for the future and help them find that product market fit, right? And I think anytime a company already has a product market fit or traction, it's already priced in, right? So like
Yep.
there's not much upside in participating in those stages rather than you're in the discovery phase. And uh, I think just having reviewed over, I would say like 20,000 projects over the past 4 years and even more during my time at Huobi, like we kind of are able to really just pick from the best of the best, right? And obviously now with the funnel fund having kicked off, we have almost 10 fund managers. They're also sending us a lot of deals. So I think we're just able to build the best top of the funnel. We have all the best founders from all the different directions that are being sent to us. And we kind of just pick the highest quality founder that's working on the most interesting idea that we think can take a lot of traction many years later, right? And we're able to be a lot more forward thinking, right? When it comes to investing, I think we have the luxury of being able to do that just because we have so much deal flow coming from all different channels, from the fund of fund side, from the exchanges side, from just early investor side, and also from the different communities that we built. So we actually have a founder's house that we built in New York that we attract founders offline as well and make really genuine connections with a lot of these founders natively offline, right? Because I think the online experience is good for a lot of coverage, but really you need the deeper sort of in-person connection that we're able to build with sort of the founder house that we set up a couple of years ago.
That's a nice way to put it. Like the online world and the internet allows you to go very wide, but for for going deep, you still really benefit from those in real life connections, meeting someone face to face, shaking their hands, having a meal together, things like that. That's what those conferences are so great for as well.
Yeah.
So yeah, okay, I get what you're saying. It sounds nice if someone says like, oh, you're just like making bets on people, but you also actually need to have the right background, right experience to be able to execute in that way. That's clear.
Yeah.
Touching on another part of your thesis, um, you believe that crypto rails are the foundation for the future of automated financial systems,
Mm.
right? Can
Yep.
you can you tell us pieces of evidence you see for this, and also like how do you even size an opportunity like that?
Yeah, I mean, I think like you can think about like the global money supply today, right? I mean, it's growing over time, and I think
Yeah.
there's a lot of other currencies that the U.S. dollar is replacing. So the stable coin volumes, to today is 300 billion in market cap. It's expected to grow to 3 trillion by end of the decade, and it's growing at a pace of 70% year over year, right? Uh, I think ultimately for the thesis as a whole, right? I think sharing a quick, simple story of my upbringing is like my mom went to the U.S. to study for a PhD when I was born, and like she, as a student, she was not able to actually open a bank account in the U.S. So we literally had to mail her physical cash from China that take over a month to get there, so she can get by day to day. And if the payment was late, she has to go work as a waitress to make her ends meet. Right? Obviously, she had a full scholarship, and that's why she was able to do her studies. But just for like um sort of day to day to get by, like she needs to make money, and there was no easy way for us to transfer money than with literally a physical envelope, right? And those back in the 90s. Obviously, things have improved now, but it's still as not as easy as like us getting on video call, me sending you a text or email. Like it's if I had to like send you money now, it's like other than with crypto, which is obviously you give me an address, I send it to you, and boom, done. Like if I had to do it physically via fiat, it's like I have to input all of this information, and the bank will call me, and they might think I'm like getting frauded, right? And like there's all these loops that are so manual that it doesn't make sense at all, right? Like we're living in a digital native world, but like the financial system is like 100 years behind, right? We're still using the very archaic Swift system. We're still doing it very manual with personal in-person banking. Like people physically have to go to a bank sometimes for like to do some of the verification process or like to sign papers to get money out the door that is your own money. And sometimes it's even difficult to get access to my own money that I own myself, right? So it's like the current financial system is so like I don't even want to say like we see the future of automated finance. It's just so manual. It's so like non-automated now. Like it needs to get more and more automated over time, and that's to build a new financial infrastructure that's based on like digital native payments that is powered by crypto, right? And like the fundamental sort of financial infrastructure will change once that happens, right? And there's another company we invested called Skyfire. They're building the foundations of agentic payment infrastructure, right? So a lot of how agents are going to be handling not only our payroll, but handling sort of how we manage our portfolio, or how we handle just our day-to-day finances. It's going to be run through a crypto native or digital native first financial system, right? And with that, all of the things that we do in the future, anything financial services related, is going to be run in a very much more automated system that our agents are going to be able to run on behalf of us. And there's a massive upside when you think about how financial services as an industry is going to be run going forward. I think this is going to displace like fintech investing in 5 years. I don't think like fintech investing will even exist anymore, right? Just like
Wow.
people like B2B SaaS, right? Sure, like people are still investing in it, but like it has evolved significantly from like 20, 30 years ago, right? And I think all sort of future investment paradigm is gonna involve some level of crypto, at least on the fintech side. And I think that's where how you say, be able to capitalize and figure out how big the industry is when you add up all the financial services and fintech investments that's been done over the past 20 years, right? It's going to be like that and better, and much more of a addressable market once like agents can do 10,000 actions. I don't know exactly how many per hour, but like it's like at least going to be a large magnitude amount of action more than a physical human, right? So like
Of
there's
course.
a lot more value capture to be done once we move into a more agentic world. And you need the infrastructure for all of that, right? And just top down, right? I think everything needs to be replaced.
Yep. Okay, I see the pieces for the reasoning, and it makes sense. I agree, and I also agree that it's like there was so much technological innovation in, let's say, the last 50 years. The internet, it touched every piece of our lives except for the financial systems,
Yeah.
right? There was no innovation there, and that's definitely changing now with everything that we're working on in this industry. So that's very exciting. Um, all right. Last part of the part of your thesis that we want to touch on is you stated that hyper gamification will be distributed across consumer apps through crypto incentives. You touched on parts of this before. You're in the Asian markets. There's so many consumers there. But can you elaborate on what you mean by this vision and what do you think that will look like on a kind of like practical examples and why do you believe it?
Yeah. I mean, I think a lot of games that we're playing, or just a lot of things that we're doing in life,
Hmm.
can be a lot more exciting if there is some level of like monetary incentive involved, right? Like, I'm a very avid poker player. I actually played poker to pay for college. And if it was just a normal card game without any money involved, I don't think anyone will play it, right? For any means, right? Similarly, when like sports, right? A lot of people watch sports because they can actually bet on the game, and there's actually a monetary incentive involved. And sometimes it's not even just watching a game. Sometimes it's like playing the game. Like I think Asia people why they love the sport of golf so much. It's not necessarily like they like playing golf. It's like they're able to very easily gamble on golf, right? And other games like baccarat or like roulette, where all of these has some type of monetary incentive involved and a reward for actually doing well and competing in games. So I used to be a pro gamer, and like that was when like pro gaming wasn't even really paid well. Obviously, I'm like one of the very few sort of pro gamers that wasn't in it for the love of being actually be able to make a living. I really enjoy the game, but there's less and less purists out there, right? I think there's
Yeah.
like people play games even nowadays in the hopes of actually making money from it. Obviously, like people enjoy the game, but if you had a monetary incentive, like that really expands for the level of participation, right? We can think about Axie Infinity. I don't think anyone thinks the game is particularly fun to play, but because there was a monetary incentive involved, and if you do well, you're able to actually make a lot of money. There's massive amount of traction. But you can think about this, all of these examples I gave, but applying to almost all the different casual games or casual things that we do in life, right? There's a much easier way to monetize when it's on blockchain rails because everything is connected to the wallet. Things can be done in a very automated way, and you can actually place bets with your friends now on like prediction markets and whatnot, right? So like life just got just a lot more interesting and obviously a lot more competitive too when you throw sort of the money element to that, right? And I think all future applications in the world is not just fun to play, but also there is a way for you to make money, right? I think you want to really merge the two worlds where you enjoy it, but at the same time you can make a living from it, right? Where like you can make not necessarily a living from it, but like there's some level of like economic incentive from it, right? That um
Yep, that makes sense. From a psychology perspective as well, human beings are so we are wired, we are evolved literally to be sensitive, attuned to gains and to losses even more so sometimes. So yeah, it's true. A lot of games that are otherwise, if you take the financial component out, it's not exciting. Like if you play poker for what's it called, like paper money or something, they do that sometimes, right? It
yeah,
it doesn't make sense anymore. Even the way that people play the game starts
yeah,
changing because there's no skin in the game. There's
yeah.
nothing at stake. So I totally see what you're saying. You must then be, well, I don't know, but what do you think about, like, what comes to mind for me is Twitch and Pump.Fun
Yeah,
and the direction they want to go with
yeah,
live streaming where you can bet. Like, I can totally see that. Like, Twitch is huge in the gaming community, like pro gaming community. If you
right.
pair that with like some crypto elements, it
Yeah.
would be very easy for live watchers to start placing bets and things like that.
Yeah.
What do you think about all that?
Yeah, I mean, I think the possibilities are endless, right? There's so many things that we do in life without any economic incentive. But like, I think a lot of that changes if like you can think about we'll probably live in a world maybe 10 years from now, like everything has some level of economic incentive, right? I mean, right now we think about it and maybe the opportunity cost, right? Like I could probably spend, if you're like a part time worker, let's say, actually my first job was actually folding clothes at Abercrombie at Hollister, right? So like I make $7 an hour, right? Like I can almost go in at any time. I know I'm making that $7 an hour, right? But like if I were to do something else, my opportunity cost is like I lose out on the $7, right? But I think it's like in eventuality, like everything in life will have some type of opportunity cost and economic incentive. If you do X, Y, Z, you don't get paid out, and it's gonna be much more streamlined in terms of your payroll as well, right? Just like everything will be automated, everything will be a smart contracts. If you do these things, gonna get paid. Whereas right now, it's like you work at a job, you get paid on a month, regardless how much time you do the whether you do well or not. Sometimes you get paid, sometimes you don't get paid. It's just like
Yeah.
um, there's a
You're
lot of
independent. You have to send the invoices, wait for the
yeah,
payment.
yeah. It's yeah. I think going forward, like just financial ecosystem will be a lot more efficient, and we're actually able to do a lot with. I think our last sort of investment thesis is actually the future of work, right? Like everyone is going to be able to get instant gratification in terms of like their ability to get paid, right? Like if I do something, I want to be able to get paid and paid out very quickly. But also like the future of automation and robotics, right? Like it's a lot of times it's not just humans doing the tasks now. Like how do we assemble a team of robots to do the more manual labor tasks? How do we get a team of agents to do some of the more intellectual tasks, right? Like that's the actual future of work, right? Not like a bunch of co-working spaces and people call that the future working environment. Like, so I think we want to invest in the infrastructure that powers a very automated sort of workforce that is able to have instant payouts, that is able to allow us to really expand the horizons of how efficient we can get our work to actually be, and we're able to do a lot more things in life than us as human. We can only prioritize. These are the things I can get done in
Hmm.
one physical day, but I think the possibilities are endless if we're able to sort of outsource a lot of the things that we want to do to the agents and the robots of the world in the future, that we're able to actually do a lot more things and accomplish way more things in life than the previous generations.
Absolutely. Also think it's what stands out to me is that I think it's an interesting notion that the gaming narrative has like died down a little bit in this industry, but this is a interesting sort of what do
Gaming,
you call it? Almost like a
fun.
backdoor where it could come back, but
Yeah,
it gets integrated into more essential parts of life, right? No, no, I understand. Exactly. Absolutely. No, I'm totally aligned. I notice a lot of times that the best video games are very good. They have very good psychologists on board, where the mission structure and the side quests, et cetera, are so well designed that there's such a good ladder for you to walk through, right? And that keeps you going. And I've often reflected that a lot of people would be a lot more productive in life if all the side quests would be um more pronounced to them, right? More obvious to them. So that kind of touches back on what you're saying. Like if we can gamify a lot of things around us, even apart from the agents, I think it could be very they might become more effective and productive if you put them in an environment where they can kind of compete. In fact, one of our partners is working on that recall network, but that's a side note. Um, it it might help both agents and people perform better, and yeah, it could be an interesting future for sure. Exactly. Absolutely. All right, now we're projecting far out. Let's take it. Let's reel it in a little bit back again before we wrap up. We already said we're both just back from KBW and Token. We touched on it here and there, but um yeah, I want to talk with you a little bit more about that specifically. Um, I think I want to ask you, like, what is your take on? Because what I've seen is that KBW was very obvious that projects are now really indexing on the Korean retail user market. Everyone is keen to that market and privy to that game. Let's say, um, what do you think about that, and how do you think it will play out? Yeah, yeah, Yeah. Yeah, that makes total sense. Um, it's getting overcrowded, right? As they say. Um, and there's also the consideration that I would hate for the Korean retail investors to end up as exit liquidity for a lot of projects, and I think we all have a role to play in preventing that. We just did a partnership with Token Post, who are going to be translating and publishing our research reports and putting them on their platform. So that will contribute to more informed decision making, at least. But you're right. There's only so much attention to go around, and so many tokens that can get that attention. Um, so it's interesting that you say it's actually, you're kind of saying what I hear is like when everybody zig, you should zag. Something you've said before, right? You're not in these overcrowded spaces. You're in kind of under the radar projects and narratives, if you could even call them that, um, where ultimately is the true asymmetric upside. So that makes sense. Um, Token then, how do you in general um, spend your time at these conferences, and how do you make sure you have the how do you make sure you get the most out of them, and yeah, talk about like what you get out of them, like what insights have you gained from your time there this time around. Mm. That's interesting. That makes sense. And it goes back to what you were saying earlier. In real life, you have an impact to build a deeper connection. And one way to do that is definitely doing panels and speaking engagements where you can speak to a lot of people directly, right? Um, that makes sense. All right. Thank you for those insights. Wrapping up, what's in on the horizon for Inception, and yeah, where can people find you if they want to learn more? Absolutely. And I think that's very apparent from this conversation we had today. We touched on so many different aspects from starting out at Huobi and even before that, having such a wide experience and trying to yeah, to an extent recreate that value offering at inception, but also doing a lot more. Um, Making early stage bets, the future of work, east and west, and how to bridge those two. It's been a very interesting conversation, David. So I want to thank you for that, and thank you for coming on. Awesome. Also, I want to thank everyone tuning in. It's always a pleasure. If you enjoyed this, you can access more insights in the following ways. For in-depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links in the bio. And of course, tune in next time. We release a new episode every week, so follow us on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.